Hey guys, welcome back to my channel. So first, sorry for the sunnies, got a bit of red eye. I may leave them on in the future because they do look kind of snappy. But I want to give you some tools that you can use that may give you a good idea about when the Bitcoin top is in. Now it's already kind of too late to buy. I mean, the pump is already in. If you haven't really got in now, then it's a little bit dangerous. It increases your risk profile the more you get into Bitcoin and altcoins. As the bull market is already underway, the most pressing question now is when should you sell your crypto? Now, in an ideal world, you should hold on to your Bitcoin till kingdom come. I can't say the same for altcoins, and although I'm very conservative when it comes to my outlook on crypto, I generally encourage people to just DCA into Bitcoin, chuck it in cold storage, and don't focus on it too much, even through bulls and bear markets. The reality is many of you are holding altcoins, so I think it's befitting to give some advice about when you should start getting rid of your altcoins and when you should start being more serious about taking profit off the table from Bitcoin. So let's get into it. I've got a few things that I want to show you, going from the more obvious things to a few more technical things. So let's get straight into that. So firstly, I've got this here. All right, let me get out of the way. So I've got Bitcoin Grandma here. Bitcoin Grandma is a good indicator. So who is Bitcoin Grandma? Bitcoin Grandma is an archetype I've just made up, and that is essentially anyone over 65 that had not been discussing cryptocurrency or alternative finance in any way, shape, or form, suddenly coming into the foray and discussing with you during Christmas, Thanksgiving, family gatherings, and suddenly talking about your Ethereum stock, or your Bitcoin stock. When she starts asking about how to download Coinbase app, when she starts asking about what the difference between Bitcoin and Ethereum is, that's when you should start selling. I think even just asking about it to you at all when previously they would have shown no interest, that's a big indicator. Now, if you've got the coolest grandma in the world or grandpa in the world, and they're just generally curious and you've known this to be a part of their personality, maybe you don't have to be too suspicious. But generally speaking, anyone over 65, I'm just being honest, has no business being in this stuff, particularly when they've only heard about cryptocurrency because of some news cycle. Bitcoin's hit 150K, 200K, it's all over CNN, it's all over normie news media. That is when you know that times they be changing, and this is usually when you're going to want to think about selling. Now, there's no one indicator that I'm going to show you that is an actual guarantee that the top is in, that you should sell, but take everything that I show you into consideration, right? When you see, 9 out of 10 of the things that I've shown you pop up, that's a good indicator, all right? So next one is, do you have any normie friends that have quit their job because of crypto? Now, it is going to vary a little bit depending on the person, right? For the most part, it is a good indicator that the top is in, right? Now, I want to put a caveat. If your friend is quitting because of crypto and they don't have any specific plan about what they're doing in the future, they just don't want to work anymore because they've got some money, that is a really good cycle top indicator. This has happened many times to me. I've known many people that have gone through this situation, and it can be a little bit different depending on the person. Like, if you know this person has been in Bitcoin for like a really long time, like 5-6 years, and they're talking about starting their own project and they've been building up to it for a long time, or they're quitting their job because they're pursuing art or something like that. Maybe you could throw a bit of a caveat in there, but the biggest one is like people quit just simply because they don't want to work anymore. They felt like they've made it, and you can tell because there's a sense of euphoria in them when someone starts talking about selling their, quitting their job, they're still, looking for work, they're trying to upskill, they're going back to school, college, they're starting a new business, they're starting an art project seriously, that's when I think you could maybe take it a bit more seriously. But generally, it's like if they're just quitting their job, they're trying to stick it to the man, that's when you should take that into consideration. And the last in this category is when you start seeing billboards popping up. So I think I want to create a difference between, say, just run-of-the-mill Bitcoin ads that you might see around, advertising certain exchanges. When you start seeing ads popping up advertising Bitcoin, and maybe, tied to that is like some exchange or something like that, I don't think that is the ultimate top indicator, but it means you're getting close. When you start seeing Bitcoin at bus stops, advertised on buses, billboards, as you go driving down the highway, you see something pertaining to why you should invest in Bitcoin. That is getting close to the top, but it's not quite there yet. The absolute death throes are when you start seeing shitcoins like this Shiba Inu. And actually I haven't paid that much attention to this photo, but I mean, this looks like it's in some kind of commie block somewhere, where it's being advertised to the residents of said commie block, in some Eastern European country. But anywhere where you start seeing buy Shiba Inu, random, what is this, gamify nonsense, NFTs, Dogecoin. When you start seeing that Safe Moon, oh geez, got a few of these. Crypto is annoying until it's inspiring, right? Miss Doge, get flocky. When you start seeing this, run for the hills. In fact, out of everything that I've showed you so far, this is the scariest indicator. Bitcoin is dead, easy with Coinbase, right? You'd want to get out of it. I think that is a really good time to start running for the hills. So those are the more easier run-of-the-mill stuff. This is the kind of thing that any person should be able to see with their own eyes. But I'm going to start getting a bit more technical. I hope you can follow along, because I've got some pretty unique ideas here. So one thing that I want you to pay attention to is the amount of leverage that goes on in the market. Now, you're going to need certain tools that I'm going to show you about how to properly analyze how much leverage there is in the market. Now, when you see in Bitcoin, when you see these huge runs, you want to break it down into what's going on. Let me show you the chart here. Come on. So the bull run happens typically a year after the halving. A year after the halving, the halving that took place in 2016. I think that was around in March. It was approximately, March of 2017, where you could see that things were really underway. Bitcoin's at $1,200. That's around about the time when the bull run is underway. However, it's around, I don't know, just again a really rough average, around a year after that where you see these cycle tops happening. And it's from that year after, roughly year after, the halving, and it's roughly after that, from that point on until the top. That's when you get crypto and Bitcoin at large going through a speculative frenzy. Now, my general theory about this, and I can't prove this, is that roughly a year after the halving is what Bitcoin tends to be truly worth, right? The biggest contributor to the value of crypto or Bitcoin going up is simply because of the supply shock that happens when the Bitcoin mining rewards get cut in half. Everything that happens after that is a result of rampant speculation, and it's not just ordinary speculation that fuels this. It tends to be the speculation that results from leverage trading and other forms of leverage, right? So I want to talk about the different forms of leverage that you want to be looking at that is going to indicate whether the speculation has gone too far. So I'm going to show you something called wrapped Bitcoin. So for those of you that aren't familiar with what wrapped Bitcoin is the DeFi version of Bitcoin. So Bitcoin doesn't have the ability to go onto these different layer 1 protocols and participate in the smart contract decentralized application system. Now, the biggest use case for DeFi, for the most part, is to provide people with leverage. Now, I mean, I know there's other things, there's ways for people to get yield, to make money through staking, whatever. But particularly when it comes to wrapped Bitcoin, DeFi mostly represents a way for people to get liquidity to maximize their gains using leverage. So the reason why wrapped Bitcoin is important is because wrapped Bitcoin is, I guess, how can I call it? So I'm losing my words here. I'm a bit tired. It can be used as a deposit to allow people to acquire leverage, right? So if someone wants to borrow more Bitcoin, or they want to borrow like Ethereum or something like that, the person doing this will have to provide some kind of deposit. And the deposit that's used is Bitcoin, because out of all the cryptos that are available, Bitcoin is the most stable. Now, of course, you can use USDT. It just so happens that wrapped Bitcoin is the most valuable out of all the cryptos that can be used as collateral. Sorry, collateral is the word I'm using. So wrapped Bitcoin. So Bitcoin is, again, as I mentioned, not available on chain. So if you want to use it on chain, you've got to turn it into wrapped Bitcoin. And the majority of the wrapped Bitcoin that you see, the $13 billion market cap that you see here, is predominantly used as collateral, so people can borrow more Bitcoin that they have, so they can take more of advantage of the price going up. So if I've got one wrapped Bitcoin, I use it as collateral so I can borrow another Bitcoin. Then when the price goes up, let's say 2x, let's just say it goes from 50,000 to 100,000. If I've essentially borrowed one Bitcoin with my Bitcoin, then I've doubled the gains that I would have had. So I would have basically 4x'd, right? So if assuming that I'll have to pay back the Bitcoin that I'll essentially give one Bitcoin back. I'll in order to get my, sorry, I'm mincing my words here. I'm a little bit tired. Essentially, I get my collateral back, and then I keep the money that I made, and I made twice the amount of money that I would have had I just been using the money that I originally had. So as market mania hype goes into overdrive, more and more people start using leverage. And there's a lot of ways to get leverage, but in the DeFi world, a lot of that leverage comes through dApps like Aave. And that's where people will deposit their wrapped Bitcoin. So if I look here, the amount of wrapped Bitcoin as a market cap, it peaked in 2021, the last bull market, where it topped off at around 16 billion for the market cap. And as you can see, we haven't actually reached that height yet. So we're a bit far away. And you might think, oh, well, if we're getting close to that previous all-time high, isn't that a top indicator? Well, not quite, because what you want to be focusing on is what is the percentage of total Bitcoin wrapped in this wrapped Bitcoin form. So I calculated the total market cap of wrapped Bitcoin right now, which is 13 billion, plus the other wrapped token, which is the only other major one, is Coinbase wrapped Bitcoin, which comes in at around $2 billion. So I came up, so that's, okay, sorry, it's 13 billion plus 2 billion. So we've got around 15 billion. And I've put this into a percentage calculator. So hang on a sec. So 13 billion plus 2 billion. This is around 15 billion of the almost 2 trillion market cap. So I put that in here. So, what is 15 bill? What is that as a percentage of the 1.9 billion of crypto, of Bitcoin's market cap? So we can see that the amount of wrapped Bitcoin right now is 0.79% of Bitcoin's total market cap, which is less than what it was at its peak during the 2021 bull run, which sat at 1.3% of the circulating Bitcoin supply. Now, as we get closer and closer to that number, the higher the likelihood that we've reached a similar stage of speculation to what we saw in the 2021 bull market. Now, in my opinion, I think we're probably going to exceed that, because the amount of Bitcoin that we've got in, the amount of Bitcoin that is wrapped Bitcoin that is going to be used as collateral is going to increase. I think because the value of Bitcoin has increased in a way for traders because we've got all these on-ramps from the ETFs. So because of the ETFs, it's now easier to borrow USD to buy Bitcoin, because various institutions can do this. And then, that Bitcoin can then be used as leverage to borrow more Bitcoin, right? So I think the capacity to lever up has gone up dramatically. And I think that's why the Bitcoin run is probably going to surprise a lot of people. I think people are quite conservative in their estimate of how high Bitcoin will go compared to the fact that, last time we only went up 3x from the previous all-time high. I think I'm not going to name any numbers because I think that is not, that's not my role. But I will say that the leverage that is available is a lot more than before. So what I'm implying is that the volatility is going to be a lot more. The price of Bitcoin is probably going to go way higher than people think, and it's probably going to crash much faster than people think. So I can't really give you a number, but what I would say is that when we start to see the amount of wrapped Bitcoin tokens as a percentage of Bitcoin's total market cap increasing to 1.3%, that's when we start seeing that things are going to get a bit more shaky and a bit more volatile. And I suspect we're going to go higher than that. When you start seeing it gets to like 2% of the total supply, that's dangerous because you have to understand that in a way, you could almost think about it as like 2% of the total Bitcoin market cap is in a way a debt belonging to someone else. That's Bitcoin that's got to be paid back because a lot of people are using their wrapped Bitcoin as leverage, as collateral for leverage. So you got to think, if 2% of the total supply has got to be paid back, if the price goes down a little bit, and that's going to, the drop in price is going to be much more dramatic because you've got all these people that are getting liquidated. If they get liquidated, they've got to pay their Bitcoin back. And, a lot of these people who were getting, free Bitcoin, not free Bitcoin, but they were getting Bitcoin because they had borrowed USD, those people are going to have to pay it back. So this is how these liquidation cascades happen, and the price is going to suddenly drop off a cliff. So if you want a good indicator for like when the market is overlevered, make sure to check out what I've shown you just now. There's no graph for it as far as I know. You have to do a bit of math yourself. But when you start seeing, the price of, the percentage of wrapped Bitcoins equaling, 1.3 to 2%, that's when you've got to understand that things are getting a little more volatile, maybe a bit too volatile. The next one that I can show you is the amount of liquidations. So when we start seeing liquidations equaling what we saw back in 2021, that's when it's a good indicator that the market is overlevered, and it's hard to get a good gauge on what the real value of Bitcoin is. So as we can see here, the green lines that we see down the bottom here, times when I think it's shorts have been liquidated, and the red lines are when longs get liquidated, or maybe it's the other way around. I can't remember exactly. But the point is, when you see this happen, it means there's a lot of longs and shorts being liquidated. And as the price is going up and you see more and more of these liquidations happen, it implies that there's just a lot more people that are trading with leverage. And the more leverage there is, the more volatility there is. And as the price gets higher and higher, it kind of indicates that a lot of the price increases were because of people levering up. So you've got all these people with 1 Bitcoin, they're trading with leverage, and now they've got 2 or 3 Bitcoin. And that 2 or 3 Bitcoin addition is a fugazi. It's not real because that's money that has to be paid back. So what comes up has to come down at some stage. So if you see the price going up and up and you see liquidations increasing more and more, that's an indication that the market is overlevered and it's got to deleverage at some time. And that's when you see these big fat red candles happening. And that's when you can see that all those people that were long using money they don't have, the chickens are coming home to roost. They've got to pay that money back. and that's when you can see that that's a problem. So healthy markets tend not to have as much leverage, you know. So as you can see here, you know, when we're in the bull market, there's hardly any leverage trading happening, and that shows that what the price of Bitcoin is a fairly accurate representation of what the real value of Bitcoin is, unadulterated by the leverage that is distorting what the value of said Bitcoin is, right? Because as I said, the price can increase because of fake money. And what I mean by fake money is I'm talking about all the debt providing leverage to speculators, essentially inadvertently pumping the price of Bitcoin up, right? So if for those that aren't familiar with leverage trading, if someone wants to go long, let's just say I've got one Bitcoin and I want to trade with 10x leverage, I use that one Bitcoin as collateral so I can borrow 9 more Bitcoin, so I can trade with 10x, right? Now, if the price of Bitcoin goes down by a certain amount, my collateral will be liquidated and I'll lose everything. And the higher the leverage that I use, the smaller the amount of the smaller the price of Bitcoin has to go down in order for my position to get liquidated. But at the same time, the more the price goes up, the more that I will make. So when I go 10x long and I put that into the market, essentially the market is being pumped up with my borrowed Bitcoin. But again, that borrowed Bitcoin has to be sold at some stage. It's either going to be sold when I get liquidated, or it's going to be sold when I close my position, or it's going to be sold when I sell at a profit. And the real value of Bitcoin will come to fruition when that debt is realized. And that's why it's really important to pay attention to this. At this stage, it doesn't look like there is that much, there's that many liquidations. I'm not saying there isn't a lot of, there's a lot more going on. But I think right now it's fairly healthy so far. One of the last things I want to show you on this category is the funding rate. So the funding rate is, as I mentioned before, when it came to trading with leverage, one of the biggest forms of trading with leverage is something called inverse perpetual contracts. So that allows someone to use Bitcoin or USD, or some other crypto as collateral to borrow more crypto. Now, you might think, like, what do these liquidity providers, like the exchanges, what do they have to gain from lending people huge amounts of money? Well, what they gain is something called, they make an interest fee for when people trade with leverage. So if you trade with leverage, every 8 hours you have to pay a certain percentage of your total position. So let's just say I've got one Bitcoin, I borrow 9 more Bitcoin, so I'm levering up 10x. The more leverage that I use, or the more money that I put into my position, the more that I'll have to pay the more that I'll have to pay in terms of this interest rate, which I have to pay every 8 hours. So to give you a rough idea, generally you might pay anywhere from 0.3%, 0.03% every 8 hours. And that really adds up, especially if you're using leverage. You could pay a huge sum of money. So pretty much you have to, you can't really be in this game for a long amount of time because those fees will add up. So what I'm trying to tell you about is that, okay, so I've got this thing here. It's the amount of the funding fees. So the higher the funding fees, that's an indication that there's more and more people trading with leverage. So as you can see here, as we were going into our peak in 2021, the funding fees were about 0.1%. So imagine you're trading with leverage. Every 8 hours, you have to pay 0.1% of the total value of your position, which is really expensive. And the reason why it goes up is because the more people that are trading with leverage, the higher the amount of fees. I won't go into all the technicals of why that's the case, but the more people that are trading with leverage, the higher the fees are going to have to be. And the fewer people that are trading with leverage, the lower the fees are going to be. So if we use 2021 as a benchmark, we can see that there was so much, the funding fees were so high. Right now, we're at a relatively, it's relatively clean. We aren't completely awash with leverage yet, which is a good sign because Bitcoin just broke 100K. Congratulations to everybody. And we can say that for the most part was not really achieved with leverage, where it seems the last market, a huge amount of that run was because traders were awash with leverage. In fact, we can see the previous run we had to 72K, the previous all-time high, had far more leverage than we have now. So I guess the reverse lesson you can take from what I'm telling you now is that we're actually in a fairly healthy market. I don't expect that we're going to have some major liquidation cascade that's going to drop the market like 20-30% because everyone got greedy. The market is not that greedy right now. So if you want an indication of where the top is, look at how many people are trading with leverage based on this indicator. So there is one more thing that I'm going to show you, and this is more this is straight technical analysis, which, by the way, I don't like to use that much. I like to use it, but only if it's in combination with a number of other things. Like, I like to look at the macro in order to be able to determine, like what's going on. You use macro and other indicators, macro and micro technical indicators to determine what's going on. So let me just swap screens. Here we go. All right, so I've got TradingView open. There's two things that I want to show you. If you're not a very technical person, which is fine, this is not really supposed to be a channel about TA and appealing to technical people. I'm just going to show you some very basic things you can use on TradingView. One is called the Pi Cycle Top Indicator, which served me very well in 2021. And it was around during 2017. And you just pretty much use this indicator, and it just shows you when the top is. It's a very simple indicator. You don't want to rely on this in and of itself. But as you can see here, on the weekly candle that it was printed, it was printed when it was like 15 to 18K back in 2017, like the absolute top. The last time that we got this was April 2021, and it was printed on a weekly candle of 56 to 63K. That showed that was the top of the previous cycle. And if you want to see when these indicators are likely to be printed, you can see when we've got these cross. Now, I think these are a slightly altered version of the EMA cross. EMA is exponential moving average, which is another indicator that a lot of traders use. And it's just a slightly altered version of that. And when you can see here, just to really break it down, when you see this yellow line cross over the white line, that's when this top happens. So we're well far away from that. So I don't think it's likely that we're going to see anything happen just yet. And the second one that I want to show you is the RSI. Most people are familiar with it, but for those that aren't familiar with how to use the RSI indicator, you're looking for major bearish, what's called a divergence on the RSI, either a bullish divergence or a bearish divergence. So a bearish divergence is when you see that the market is, it's a good way of seeing when the market is oversold. So you don't really see it as much here. Let me think. You don't okay, I know. What am I saying? Yeah, you do see it here. So as we can see here, when you see the RSI, it's in this oversold territory above 70. What you're going to see are these peaks, right? And when consecutive peaks are okay, so you know what, that is not necessarily a good example of this. 2021 was a good example. By the way, this stuff is not a science. That's why I said you have to combine it with a number of other things. But I'll show you here, right? When you see consecutive peaks getting lower, but the price getting higher, that's what you call a divergence in a bullish divergence. Sorry, a bearish divergence, right? So it's kind of like a mismatch between like the real demand and the price, as fueled by speculation. So when we started to see this, that would have been a sign that we were in for a major correction. And then when we started to see this, that it was actually a long-term trend. The RSI peaks are getting lower and lower, but the price is getting higher and higher. And, we can see that this starts going, down and down and down towards, the last major peak we had was like in November 2021. That was like a good indicator that this was a bearish divergence that was going to play out, and this was most likely going to be the end. And yeah, so those are some tools that you can use. So guys, if you like this video, please make sure to subscribe. I give a lot of good, no nonsense advice about trading crypto, but for the most part, I'm not really I don't want to be known as a channel that is about speculating, and I don't want to tell you about how to make easy money. For the most part, my principal passion is debank. It's in the name, Debank Dave, and I like to help people use cryptocurrency to reduce their reliance on centralized financial systems. And one of the key tools I use to do that is something called peer-to-peer trading. So in peer-to-peer trading, first, it's a good way of being able to buy and sell cryptocurrency without KYC. So if you use a major centralized exchange like Binance, Coinbase, whatnot, you're going to have to provide all this kind of personal information. But on peer-to-peer exchanges, you don't have to do that because you're buying directly from another person. The other person you're dealing with is not some large institution, just a regular person like you. They just want to sell their cryptocurrency for who knows what reason, and they don't need to collect your information. They don't care about that. You're just sending funds from another person to another person, and let's just say if it's a bank transfer, you'll just say it on the bank transfer. It's just going to say, Debank Dave send funds to John Doe, right? As opposed to Debank Dave send funds to Coinbase Finance, right? So on the banking level, it's anonymous. On these exchanges where there's no KYC, it's anonymous. It's a completely anonymous transaction. And I think this is really good because I think centralized exchanges have monopolized the trading volume, and it's essentially de-anonymizing people's use of crypto, which is not a good thing. And it's also a good way of making money. If you're interested in making money in crypto without being involved in speculation and fraud and all this Ponzi scheme crap, which is what most YouTubers are frequently trying to get people to get involved in, you can use my referral links in the description down below to sign up with peer-to-peer exchanges, local CoinSwap, HODL, and I've got a few others. And you can check out some of my other videos on instructions on how to effectively utilize these platforms to sell cryptocurrency above market rate. So a general breakdown of it goes like this. On centralized exchanges, you can only buy and sell crypto with a bank transfer, but there's a lot of people in the world that don't want to use a bank transfer. They want to use TransferWise. They want to use Revolut. They want to use M-Pesa. There's hundreds and hundreds and hundreds of different payment methods that are not bank transfers. And if you're willing to provide that avenue to other people, if you're able to provide a demand, a supply for this service, you're willing to sell Bitcoin for TransferWise, you can charge a markup, of 2, 3, 4%. A lot of people are willing to pay extra just simply because you're giving them what they want. And that's the best way to make money because you're just an ordinary person selling a product that people want. And the product that they want is to be able to buy Bitcoin with a payment method they actually want to buy it with. So if you can do that, you can make some good money doing that. And make sure to check out some of my other videos because I've got a lot of ways to make money in crypto that is just not really degen, just a lot of really run-of-the-mill stuff, business-related stuff. So make sure to subscribe, check out those links, and I'll see you in the next video.